only me here, isn't it, Mike? I think.
Yeah.
Should we wait? Do you want to wait till somebody else comes?
No, it's 2 minutes past. We might as well get going. Okay. What I was going to do is just talk about trade. Just patterns, chart patterns. So I have been buying dips in this beans on the basis that I'm hoping that this pattern over here is going to be a repeat of this pattern over here, which coincides with the same, well, similar period. We actually broke up here back end of May 19. So we popped up here early May. We were weak. Okay, no, it doesn't correspond with it. So I'm a month. This was a month adrift of where we are at the moment. So this was back end of April. We were really weak. So it was a full. We went right into May before that broke out. So at the moment, I am hoping that this price action here and on March is going to sustain. It's going to get traders interested and get them to push this one up. So I've just been buying a couple of dips in here at the moment, and so I need a close above this 84. Sorry, 840, $8.40 to really get that going. Otherwise, all the time we stay down in the bottom half here, we could just roll over.
I'll tell you what. Yeah. I mean, I can completely see the logic. Yeah.
Okay, so that's so the main chart pattern I'm looking at is all the support underneath, which we tested on 21st, and this overlying long-term resistance that's coming in right across the top. So you've got a trend line floating above us. We've got all this resistance up here. But I'm just looking for this to build, and at some stage in the coming days, close above 850 and go on a nice little run into 870 up to $9 plus. So let's see what that one does. So let's have a look at, stay in the same sector for a moment. Let's have a look at other softs.
I can't buy any of these softs, so I'm a bit sort
of. Really?
No.
What, your broker doesn't let you trade?
No, it doesn't do them on CFDs. On CFDs, the only commodities that, well, in fact, it doesn't let you do many commodities at all on CFDs.
What about ETFs?
Yeah, let's have a look at ETFs
because there's all of these commodities are available in ETFs.
Oh, okay. So I've got, for example, United States Oil Fund, iShares, Vanguard S&P, iShares Gold Trust, iShares Russell 2000. It hasn't got many ETFs. It's got United States Oil. Let me just search and just put in.
USO is one of the most popular oil ETFs.
Yeah, USO.
Yeah.
I can definitely trade that, and I can definitely buy that in the. I can definitely buy that in the thing. Let me have a look, because it doesn't have anything, but anything to do with beans, I can't see where I could buy.
It'll be. What about? Have a look at wheat and corn. Just.
Yeah, I just put it. I've tried before.
Right. Okay. All right. Okay. That's really weird.
That's me. I mean, I'm sure other people can, but then if I go onto IG Trader, I will be able to trade them, won't I?
Yes, you can do CFDs or ETFs on IG, I think.
I'm thinking of going to IG Trader. The reason being, firstly, to get these commodities, and secondly, because if I started to place bigger trades, probably the commission would work out better. And thirdly, because I get access to your really nice graphing package, which I like.
Yeah, this IG call them advanced charts, but it's basically the provider is Pro Real Time.
Exactly, and Pro Real Time wants, I think they want £30 a month to subscribe.
Yeah, at least, if not more, if you subscribe to other data streams.
So I'm thinking, I think what I might do is open an IG Trader account, because I think I'd like to have a go at these softs, and you keep talking about beans, and I keep thinking, looks interesting, and I can see, again, I can really get the logic of how that all works.
There's a massive block here, isn't it? The huge price block here.
But it's also, I think that's a very old commodity, isn't it? I mean, it's been going for hundreds of years, hasn't it?
Yeah.
So I would have thought the market would be much more able to behave in a pattern with a kind of wheat, beans, orange juice. I mean, it's been, you know what I'm saying? It feels like it's much more of a, and probably a much more experienced traders market. Does that sound logical? I mean, I don't think,
yeah, okay.
It's more of an experienced traders market, more like not like a Bitcoin. You know, I'm sure lots of people get seduced by things like Bitcoins, and I'd have thought that something like wheat and beans is more.
Yeah, it is quite. You're right. It's just not trendy. It's just not.
Exactly.
Bitcoins is much more sexy, isn't it?
But then there's money to be made there, so that's what.
The reason why I like these beans is because it's a good time of year to trade them. We've had planting season and recent crop reports out last week. That's why we got a really nice push up last week, but it didn't. At the moment, it's just not been sustained. So from crop reports came out on the 21st. We had 3 days of higher closes, and then we've just been drifting lower. So anyway, we've been drifting lower into support, so that's why I'm clinging on.
Exactly. No, I think it's a good. I mean, I'm going to get my GTrader account and get some beans going. I think it's a good one.
And if we close above this 850 and hold above 850, and all the time above that, I think we can then start climbing into 9, 10, and more. But the downside of these is the thing that really sparked the market is the way in which the South Americans, particularly the Brazilians, chopped down a lot of their rainforests and started planting soybeans like it's going out of fashion, and that sort of took the guts out of the market. But there is at the moment, the US grain belt is very dry, so crop yields could be seriously affected.
Okay.
Let's have a look at wheat, because that's not working at all at the moment. That is very, so we had a really nice push up here. That's a fantastic pattern. Notice how we just breached it and immediately closed higher on middle of March. So all we're doing, we've had very bearish of late, but all we're doing is coming right into resistance. This trend line again, this trend line support. So,
and there's some nice pips to be taken, aren't there?
Yeah, there is. We've got the $5 down there, so it's possible we may go right back down to $5.
But we're coming into range, aren't we? We're coming into a good buy range. So we need to look for a buy signal on wheat. Yeah.
Yes, we need to. We might possibly see. Notice how it broke under the $5 and immediately went back up. These are the kind of little tricks that the market gets up to.
Yeah, it's that round numbers thing, isn't it? I noticed that with today, it keeps going up to 1300 and it gets to 12.99, pushes straight back up to 1300. Yeah.
So you get $4.91 cents on the 16th of March. Closes higher on the 17th of March, and then it closes above it on the 18th of March, and then we go on a run.
Yeah.
So we may come and sit on or in that box again.
Is it being at all affected by COVID? Is it because the millers aren't open?
Don't know the answer to that. The normal. There's 3 factors: weather, dollar, and acreage.
Okay.
Weather, dollar, and acreage. So if South Americans decide that wheat's really are, potentially going to bust up in price, and they swap a lot of their soybean planting for wheat, etc., or whatever, that could that could kill the price. Obviously, dollars are crucial because we're talking about the US exchanges on this one, and yeah, otherwise just weather. So through, and the other overriding thing is, of course, the cycle. So this is the normal part of the year, the annual cycle where you would normally expect these to start to pick up and make some moves. So but a lovely chart pattern, and we're sitting, got all that resistance up there at 580. So we saw 580 in August 18 and January this year. So let's see if we can do something, because if it does, next time it comes up to 580, could be through and through. So we had 3 touches of this since August 18.
Okay.
If we come up there and close above 580, that's massive. That's really huge. And it's also a big box to me. It's another chart pattern, a big box. It's slopping around in the big box. Now, normally when a box play draws to an end, you normally get it coming up from the middle. And so if it breaks above that box, the depth of this box is $1.60. So if I put $1.60 on the top of that, the easiest thing to do is to copy that and drop it up.
Oh, okay. That'd be nice.
We could potentially get up to 740, 750.
Wow.
If that comes out of that box. Let's do the same for beans. Similar story. These beans, wheat and corn used to work really hand in hand. Not so much these days, but there's still a decent correlation. So big box, copy that one, drop it up. So potential, so we got a extension up there at $10.60, and the top of the box would be $11. And that $11 for odd, oh no, the extension takes us up to April 18 highs.
And actually, I've seen that today, that box thing on a number of shares, like for example, BP. It was wobbling around before, and then it's kind of it's almost,
yeah,
it was in a box for a few days from the 17th, for example, 17th to the 22nd, and then it just moved its box to almost the same dimension of box up to a new level.
So that's having a good bounce down here, isn't it? Yeah, these I don't hear people talk about this box strategy. It's a very old-fashioned way of looking at the market, I think, in terms of technical trading. Yeah, so we got a big box down there, topped out at 350.
But if you put it on a 3 months, put it on a daily. Oh, you got it daily. Put it onto a 4-hour chart, and you can see the boxes more clearly, I think.
Okay. Yeah, we've certainly got this. I've drawn this trend line underneath it, which it came up from the 21st. Yeah, I mean, the box for me here would be.
What have I got that's making it look like a much clearer box? I'm on BP and I'm on a 1-hour chart. Sorry, I'm on a 1 hour.
You're on a 1 hour, okay.
Go 1 hour, and then I think you can see the box much more clearly.
Yeah, I would.
You see the one underneath and then the one on top.
Okay, so you got a block here, and then almost
it looks much clearer on my graph. It looks much clearer on my screen.
Okay. Well, that fits. That fits because we only came out of that box for a very brief period, only on the second. So certainly 350. I mean, that's without any I've done the bottom box first, and the top box has picked off 350, bang on.
You're going back much further than me, that's why. I'm only looking at the period.
Okay.
I'm only looking at from the 16th of April up to the 23rd, and then from the 23rd up until today. So the last 10 days, it's done 5 days lower box, 5 days upper box. That's
Okay.
This last section here, you can see the bottom box and the top box, and then it looks like it's going up to a third box.
Anyway, I think the point is, one thing, I tell you what I would do here is you gap down on Monday the 9th, and then you get this interesting bar here. If you just put the high and low of that bar on there, that picks off a lot of, certainly this price action here from 16th of April onwards. So the fact we're holding above that range at the moment bodes really well.
Well, I'll tell you what I've done today, which you might or might not like.
Go on.
No. So what I've decided is that I think the close is a really important thing, as you said to me, the close is an important thing. So, and I think that my hunch with Booking.com and my hunch with Expedia worked very nicely for me. So, and it also worked very nicely for me, Deutsche Bank. In each of those cases, I've watched it go open higher level than yesterday and close at a higher level than that. So it's had a day of growth, and then the next day it's closed, it's breached, it's opened way higher than the close. So what I've decided to do is, with Barclays, I've been watching Barclays like a hawk all day, and Barclays got up to, it's got past that level of 107, which was its real stumbling block. So it's well into new territory, and it's managed to close at 109. So I've taken a position on Barclays. It's closed at 111.
Yeah.
So what I've done is I've taken a position on Barclays at 111 at close.
Right.
I put in a stop loss at 109.
Okay.
So in other words, if it opens, as I suspect it might, if it shoots up in the open tomorrow and it goes up to 120, I'm in. So I've got that guarantee. But if it doesn't, if it goes down tomorrow in the open, then I've got such a tight stop loss, I've only lost 20 quid.
Okay.
So I've put on a 223 margin, and I've done exactly the same for Lloyd's, because Lloyd's is behaving exactly the same way and they're announcing results tomorrow. So really it's just a question of positioning yourself right next to the upper limit today, so that tomorrow, if it's had a good day today, position yourself at the top of that range. I mean, obviously you don't want to ideally be at the top, but if the top is where you end up, at least you're in a good position for tomorrow, and then see if it pushes you up tomorrow.
Okay.
There's a logic in that, isn't there? Because it's worked for me.
Yeah.
I mean, with Booking, it was my hunch yesterday that it closed up. It had a really good day yesterday. So my hunch was people are going to pile into it, and they did.
Okay.
And I was 100 up on open.
Well, listen, I think I mean, you've taken into account risk management. So as far as I'm concerned, yeah, go for it. As long as it doesn't matter what sort of strategy you employ, as long as risk management is at the core, then that's fine.
I think that the open, I mean, I think that some of these resistance barriers are so strong that the only way to get through them is when the market opens. So if we look at BP, for example, BP just it's desperately trying to knock on the door of that that barrier, isn't it? That 334 barrier, and it just can't seem to get through that barrier. And I'm thinking the only way if you took a position on BP, I mean, it's closed now, BP, but if you took a position on BP just before the close, because it's closed just under that resistance level, it might open, and you just put in an incredibly tight stop, so that the only way you're not stopped out is if it opens way above that resistance level. because that's happened to me 3 times with booking Expedia Deutsche Bank. It's jumped right through the resistance level and gone the other side of it in the open. You following my logic?
Yeah, no, that's fine. That's fine.
I mean, it's a plan. It's a strategy, isn't it? Just to get in.
Yeah.
So that, get it when it doesn't hit the resistance overnight, and you just hope there's enough buyers looking at it, thinking, oh, let's pile into that, and pushes it right through that resistance level and out the other side. At which point, all the automated trades then trigger because it's pushed through that resistance and it starts to bomb, and then it goes up.
Yeah.
Yeah.
That's fine. You know, if you've if you've got a system working that's and you can rationalize it on a technical level, great, go for it.
Yeah. Okay.
Just bear with me one moment. I just need to sort something out on my account.
Well, Mike, if you don't, because you're going to do this thing at 7:30, aren't you? And if nobody else is going to come, I don't mind not doing such a long session. You know, we could you could just cover what you want to cover tonight, because I mean, we've done a lot today, haven't we? So
yeah. Well, let's just look at a couple of things quickly. I'm just
sure. I'm happy
to
just
trying to sort something out. Oh, I know what I've done. Silly me. Just need a half a moment. Okay. Just scaling out of. Building up in beans. I'm just taking a little bit of profit off the table as they run.
Okay.
Let's come back to beans for a second. I'll just show you what's going on.
I'm just scanning other stuff, so I'm happy for you to take a look.
Yeah, so literally since we started speaking, beans have had a little pop. Yeah.
Oh, damn! It's because I'm looking at it because I've just written on my list buy beans, and of course it's going to.
Don't worry. I mean, there is plenty to go for on this. This is going to take a while to push up, but we've come up since we've been talking. We've only come up sort of 4 or 5 cents. Well, 4 or 5 cents is quite a lot in futures terms.
Yeah. Why not? I mean,
each one. Well, these guys are traded in quarters, oddly enough. And each 1 cent move is worth, per one contract, is worth $12 to $15. I can't remember which, about $12 I think, for a 1 cent move. So if you're loaded up on contracts, you know, a break is massive. You know, is big money.
Yes.
If you look at the time, this is when I started trading beans a long time ago. I don't know how much data will let me show. This is when I started trading beans, back here. In this, I was day trading beans here, and there was one day in beans. They went. The reason why beans used to be so great to trade is because the cash session used to be very, very limited. It was, I think it was 3:30 to 7:15 p.m. in the afternoon UK time. And what would happen is, and the beans were much more, or the pits were very regulated. If you had a 70-cent move in beans, you automatic shutdown on the market.
Oh.
They just shut the whole damn market down, and it doesn't matter what position you had, you couldn't do a damn thing. And during this period, they went it's called limit up or limit down. They went limit up 3 days in a row, so you could not touch your contracts for 3 days in a row. So that meant you had a 70-cent times 3 days move. So if you were short, God knows why you want to be short these beans anyway, but if you were short, you get killed.
Why would you not want to be short in beans?
Because this is a breakout pattern.
Oh, I see. So you
I'm
mean
talking about back here.
Oh, okay. Yeah. Got it. Yeah.
When I was trading it, when I was day trading it, and I mean, this went from $4 to 16. This went 400%. Yeah, it was a drought in the grain belt. Plus the dollar was very weak as well, so it's double whammy. So that's why I love the beans anyway, because yeah, when they fly, they fly.
Yeah.
They really go.
I mean, that's the point, and it's exactly, and it's
if you catch a bid in the beans, they are extremely good. Anyway, that's why I'm interested. That's the monthly chart. I mean, while we're here, let's just look at the monthly chart. I've got this trend line coming across here. So a monthly resistance is $9.50. And again, we bashed our heads against this monthly resistance. So since that was formed in July 8, sold off there September 2011, had this little breakup. We were there again in June 16, April 18. So we are due a break. We are really due a break up here. So I think these are very attractive. So on a weekly, you can see the big box on the weekly chart. So the weekly box has a high of 958, and a breach of 958 could longer term take us all the way up to that 1085. So I like them. I like them. And evidence today is that they are certainly getting bid today anyway. So look at this is my hourly chart. Nice trend line underneath. So we're not. So this week we should see $8.40, $8.50.
Well, I'll put in. I think I'm just opening my IG Trader account while you're speaking.
Okay.
I will actually.
You need to wait for a pullback here. The beans close. They still have very specific trading sessions. They close in 45 minutes.
I might be able to get in between now and then.
Yeah, I just think, if you, as long as you get a decent stop on them, yeah, as long as you got a decent stop on them, they are worth buying now.
Yeah.
Okay, chart patterns. Let's go into chart patterns on dailies, and then we'll drill down to longer time frames. So stay on the theme of commodities for the moment, and then we'll move across to indices, forex quickly. And we'll also look at metals. So orange juice has had a blast up. That's in no man's land at the moment, but the subject is chart patterns, and this $9.58 down here, during March saw. Look at this massive breakup. This is what you can see. This was asleep.
Hang on, can you just give me 2 seconds just to buy some beans?
Okay.
Just entertain yourself for 2 seconds.
Well, I'll just talk generally for a moment.
There's other people in the. Okay, sorry. There's other people. I'll ignore me.
So this market just fell asleep from once we broke back in here in June last year, which is typical because of the seasonality of this market. So we fell asleep here, started breaching these lows. So a good indication that the market could be ready to break out is once they breach these lows and close back up. They did that in February this year, and they did it in early March this year, and then they finally so we see a lot of people getting positioned here on orange juice at 96.20, closed above 990. And then after that close on the 19th of March, we just went on a blast, absolutely took off. So the market just got bid right up. So that's massive in futures terms. That's huge. That's a huge profit. So if we see, it's worth putting an alarm on there for 10.97 if that comes back. but in the meantime that has had a fantastic run. And sugar, I've been watching sugar very carefully as well. So these commodities have had a tough time. You know, had that commodity boom in the run up to 08. So this went on a fantastic run. Oh, February, wow. What happened to sugar in that period? That's amazing. Look at that, huge run up, and then they just completely pulled the plug and went all the way from 434 to 304. Okay, that's wacky. So I'm going to set an alarm for 310 on sugar to see if we can get, if we pull back at 310, I will at least nibble on sugar and then start to potentially build a position, but that's run away from me at the moment. So I'll get through cotton. Cotton's interesting. I'd need a deeper pull. I'd need a pullback to that trend line in cotton. I'd want to see 554.20 on that on cotton. I'm just going to set a whole bunch of alarms on these, I think. 54.20. Rough rice is gone. We're way behind rough rice. And cocoa's gone. And that was the buy signal down there on the 16th of April. New low, immediate close above. Fantastic buy signal. Very shallow pullback on the Friday the 17th. Had a fantastic move right up into the fib zone at 1940, and these pullbacks are currently getting bought. I'd need to see, to trade that, I would want to see ideally 1850. I'm not sure I'm going to see it, but I'll hold out. I'll keep watching. But if that gets knocked back down again, I would be interested in that one. Right, metals. Moving on to metals, let's have a look at, I've been dipping in and out of gold over the last couple of weeks. So still wrestling with this 1700. So not much to do on that at the moment. I wouldn't, I did run that up into 1730 last week, took it off at that resistance up there, dipped back in at 1690, scaled out at 1610 or 11 I think, and then so I've got a small position around here, just hovering around that just at that 1690, and beans are still creeping up a little. And let's have a look at silver. Silver's interesting. What would I want to do with silver? I would ideally like to see that come all the way back to 1465. So we're under the 20-day average at the moment. So I'm going to set an alarm for a pullback on that one. Chart pattern, what have we got? We've got held that trend line and then gave out. Let's fib it. So we're right on the 50%. So 1425 would fall back to that zone again. I'm still going to hold out 1465. See if we can pull back, and then I would need that to yeah. So that's good. We got that would be a retest of the trend line back down there at 1465. So I'm going to keep an eye out for that anyway. Oil. Had a good couple of days, pushed into resistance, really divergent. And that's a classic. This is the awesome oscillator, which basically sort of exaggerated histograms from a MACD. And so a completely new low with a higher low in the histogram. So the rush to the floor created this massive divergence, and so I'm looking at this gap as well. That video I sent you a copy of today, those Carly's looking at, my mate Carly's looking at this gap as well.
Can we, with oil, is it worth looking at the oil futures for the June sale, the June 21st? Because they've just appeared on my trading platform, and I thought they were probably a better.
Let me see if I can grab. Yeah, I should be able to grab the June contract. Let's have a look.
I just wondered if there'd be a bit more stability there. The 22nd of June 20 contract.
I think it's a bit fiddly for me to get it up on this.
Okay.
Oh, here we are, futures. I don't know. I don't think I can change the chart on that. Let me have a look. June contract. Right, can I now take that chart out of this?
In fact, it doesn't. It's still. In fact, to be honest, it's still just. It's still all over the place. It's just a higher level. It's at 19.
Yeah.
It's at 19,261, but it's not actually. I mean, it's come down.
Yeah.
It's a pretty similar chart actually. So don't worry about it.
So the rollover contract is saying. Won't let me do it. Yes, it will.
Oh, there you go. Hello.
Rollover contract is saying 1660, whereas the June contract is saying 1520. So yeah, that's
it's not a huge difference, is it? It's not a huge difference.
Let's have a look. It's $1.40 difference.
Yeah.
So yeah, it's say not huge. I think that gap has diminished anyway. So in terms of chart patterns, yeah, we got a daily buy signal, little pin bar here yesterday, divergence. We've just got to see if we can roll over here. We just got to get this next contract out of the way and then see if we can potentially pop up. It's a tough one to call, but it's certainly, if you want to trade oil, it's certainly potentially worth trying to pick up any lows down here around about the 12.14 mark if you want to trade it, and you've got to at least have a stop under 12 to stay in that. And then if we can close above 1750.18 anytime soon, I could see it poke up. Overall, the trend is down. The trend is still down. There's the threat of that still dipping, but at some stage it's going to go to 40. It's going to wind up to 40 at some stage. It's just a matter of how many weeks and months it takes.
So again, you would recommend if you're buying something for a yearly investment, not a bad thing to buy when it's low.
In small scale, have a nice wide stop if you want to sit in it. That is.
No, I mean if you just buy, or if you buy an ETF, for example, and then you could just buy the share.
Yeah, the other extensive scans on oil stocks now. This is one of my. So they're already perking up. All the time oil was hitting, crashing and really coming in a lot of pressure. These stocks are already perking up. So these guys, so a lot of oil traders were getting in there on these dips. So we're not far off resistance on that one. So if we dip later in this month, I think what I would look for in this one is that if we dip later this month on a stock like this into that support at 850, I will get very interested. The other ones that Murphy, same story. That's good at 8, potentially 8. Let's look at some big boys. Chevron. Well, that's already getting close to major resistance. So,
and the reason is that they've been buying oil cheap when it's been going so cheap, and now
yeah, I think also what's been happening is I think US government strategic reserves and other governments have been probably stocking up their reserves at those lows. Also, there's a lot of shenanigans going along on the storage concept. While storage in the oil producing regions is close to capacity, a lot of storage outside of the oil producing countries is a lot cheaper and has capacity. So I think a lot of guys are potentially buying oil and shipping it some distance, ready to drag it out and turn and sell it once the we get close to that $40 a barrel.
I'm going closer to home. We looked at BP. That's another one.
Yeah. So let me just look at a couple. This one is not one I normally look up at, but was quoted on that video I showed you. $7.50. I'd be interested in that one. Don't want to trade a penny stock like that. Pioneer.
There's two low. TULLOW. I've seen that one a few times.
So what's the ticker for that?
Hold on, I'll find it. It says 1 second. TLW.
Oh, Tullow.
Tullow.
Oh, Tullow. Yeah. Okay. Yeah.
Very much on your chart.
Don't like the look of that.
No.
I really don't like the look of that. There's something wrong with that stock.
I keep seeing
that was a good favourite. You can see this side of the chart. It was nice and liquid and well and traded. That's got an issue. That one. I wouldn't touch Tullow. Other ones, other UK ones. Okay, let's switch over to Big B. Well, it's looking as if we're going to see, well, we're very close to 350 anyway. So you would assume that we can go to 350 fairly soon.
That's the key thing. Can it punch through that resistance level of 330?
Yeah.
337. If it can get up to 350, it's going to go much higher, isn't it?
Yeah.
It could easily go 370.
If we keep going, well, if you're in it, then stay in it and see if we can. So we've got a gap up here at 392, 390. So at some stage that's going to go and see 390. I'm not in this, but if we dip down to 280, 285, I would buy down there. So I'm going to have to watch that. That's just going to have to be watched for me.
Mm-hmm.
Yeah, as you say, in the meantime, at the moment, the path of least resistance appears to be up.
It hasn't managed to get through that.
No.
I mean, all day it's been knocking on the door of that 3.
In the meantime, I would just look for. Yeah, I'm just going to look for a pullback at the moment.
But it's probably one to watch. If it does pull back, it's probably a good one
to I'll definitely be trying to buy some of that on a drop. Yeah, on a significant drop, it back into that support. Yes. Right. So a quick look. Let's switch over to the indices now, because let's have a look at what's happened on intraday. Yeah, so we got into the plus 127 and seeing a significant drop off there. It's 100, okay, yeah, 100 pip drop for some reason. Well, certainly it's had a nice little run. The theme today was chart patterns, so we got a little ahead of ourselves. Now we're just pulling back. It's fed in 13 minutes, so traders are taking profits just to clear the books before the Fed announce. So 550, if we get some erratic moves and we come down to 550 and hold 550, that would be a good one to potentially trade to the upside. But I would look at that. I would stand aside while you get all the chop and slop, and then see where we are once the press conference is well underway. See what the market reaction is to the press conference. Interesting, we had a 15-minute sell signal here at 3:15 and immediately closed higher.
So you believe that the Fed announcement could actually affect all stocks? I mean,
all I'm saying is I think it'll just be, I think it's going to be a bit jittery, potentially a little bit whippy. At the very least, it's going to be whippy around that period.
Mm-hmm.
And then as the market digests whatever the decision is and what Mr. Powell is saying at 7:30 our time, then but the market's going to be listening to Mr. Powell with wide open ears. You know, they're going to be hanging on his every word, looking for clues as to how he may or may not react as the weeks unfold in the battle against the virus.
Mm-hmm.
But technically, I mean, yeah, we're here to talk about technicals. Just watch out for 475.50 on the long side for those levels to hold. If we start closing under 550 and subsequently close under 480, then we could be in for some rocky times ahead. I mean, I think it's pretty, at the moment, it would seem blindingly obvious that Powell's just going to come along and say, well, we're pumping all these trillions in the market. People are beginning to ease back to work. It's, rocky times ahead, but overall, once we'll probably have another quarter of weak GDP. But the second half of the year, as everybody gets back to work, the economy should pick up and do better in 2021. That's what he's going to say.
Okay. That's all right then.
Because that's what he
does that.
How can he not say that? I mean, that's the score, isn't it? Everybody knows what the score is.
Mm-hmm.
Everybody knows it's rocky, and there's a lot of poor data pouring out of the books at the moment. It's just going to be a question of how the Fed can steady the ship, keep as many jobs open as absolutely possible while we find a vaccine and learn to live with social distancing in the meantime.
Mm-hmm.
Chart patterns, but yeah, just watch out for, we've had some nice chart patterns this week. We saw a massive leap up on Thursday the 16th, pulled right back and a little bit more last week. Horrible cash market yesterday. All the lifting was done up in the European period, so most of the cash period was just spent drifting lower. So the cash market's been rubbish this week. So we need to let's hope we get a good second half of the week. Yeah, really good point. Sell in May and go away. I think at the moment the rule books have been rewritten. This year's, it's we're so skewed by this virus that the whole start of the, you normally come into the cycle. If we had a normal cycle, you would see, dip into January, maybe a little bit of a tail off in the selling in early February, and then start to wind up into March and April, still tick up into May, and then profit taking, summer doldrums, and then pick up the back end of July, August, little hesitation in the autumn, and then run up to Christmas. But we've had this huge plunge, demand slump into the, and then recovery bounce into April, latter half of March into April. So it's a completely different ball game. So it's a question of what we can do at this recovery stage, whether we can break up, pull back and run, or whether we're just going to hit resistance and then struggle into as we get into the summer. So it's a different. It's much harder to predict at the moment. The recovery is still ticking by. It's just a question of what we can do in the next. I think how we come out of this week is going to matter. I do think we're in a bear market. If we go back to the daily, I'm looking to short is, I think the next level to short is 25 or 25,700. I think if we do ping into that area, that's going to be a big struggle. So at the moment I was looking to see if this wave would be continued. It wasn't. So then we've been buying dips at the moment and still looking to sell. At that period, we have a selling period here. At the moment, we're still in a buying period. Let's see if we can reach out to 25,000. If we can close above 25,000, then 25.8, 25.7, 25.8, and then get short. So at the moment, there's no reason to sell at the moment, or certainly I am selling intraday, intra-week, but I'm literally flipping it. If it doesn't work, I'll manage my position and back off if it doesn't work. But I mean the market at the moment is, some days, many a day, you can literally sell into one period and buy in another period at the moment on certain days. See how it goes. I'm just on high alert for any sell signals, and there aren't any sell signals at the moment. We're still.
And is there a danger that because we're so busy looking for sell signals that there's a hell of a lot of buy signals out there?
I've got to be careful. I mean, yeah, I've got to be careful that I don't. Yeah, if you come into this with one mindset while the market's busy having the dips bought, then you're not. You're going to suffer. Yeah, you're going to. I'll pay the price.
You know what I mean? I'm thinking of the, for example, the Barclays, the BP. If you go into that looking at it with a very bearish mentality, and actually BP has zonked, Barclays has zonked. I mean, we've had some really nice movement in UK shares in the last few days.
Yeah.
And if you're kind of thinking, but it's going to go down, it's just a danger we've got to kind of.
That's why I just had to be. I had to try and be as mechanical as possible at all times.
Exactly. And I think also just. Yeah, because I mean, some of there is some quite nice money to be made on some of these rising stocks, isn't there?
Yeah, and we just gone through even oil. I mean, oil looked. Yeah, everybody was. And this time last week when oil was crashing, everybody was talking about how oil wouldn't recover. It would, you have any small or any significant rallies were to be sold into, and all of a sudden people are talking about seeing $40 a barrel and potentially buying some and tucking it away and see if it can continue to climb. So the sentiment is changing in this kind of market. Sentiment's almost changing by the day, let alone the week.
Yeah, and also the oil companies. That's a really good point. That it didn't, obviously, because I'm a bit stupid, it didn't occur to me that companies like BP are buying all this oil really, really cheap.
Yeah.
So when it's $10 a barrel, they're buying it cheap, sticking it on one side, finding somewhere to store it, and then they're going to sell it on to us for much more expensive in the future.
Yeah, I mean, storage.
Selling it to British Airways, actually, because British Airways is hedged at about $90 a barrel, haven't they? So
Yeah,
I mean, if you're supplying oil to BA, you're laughing at the moment.
yeah, and that's why, and that hence the share price, because all these big guys, the
Well, that's
Chevrons.
come back up. BA's come back up. IAG went up to 225. I sold at 220. I got my money back.
Okay.
It went up. I don't. God only knows why it's gone back up. But I thought I'm getting the hell out of there. So
Okay.
yeah, it's gone. It's gone. It
Right. We've almost got. Let's have a quick look to see what sort of week.
It's gone 228. It's gone 228. So
okay.
Obviously people thought they've announced the redundancies. Now there's some value in the business. I don't understand why it went up. But I just thought get out.
I'm just about to come up to 2 minutes off of the Fed decision. So let's have a quick look.
How quickly does the decision come out? I mean,
well, you get a rate decision at 7, and then you get a press conference at 7:30. So it's literally.
You're looking for the rate decision.
Literally, as you tick into 7 o'clock, the data is released.
Okay.
And the algorithms will kick in depending on what we see.
And the rate is interest rate, obviously.
It's interest rate, but then the key. We didn't used to have press conferences. I'll tell you what, the giveaway to US rate decisions used to be press conferences, because Powell's predecessors didn't always have a press conference unless there was a rate change. Now Powell said he's going to have a press conference every single time. Bank of England always had press conferences, but the US didn't always do it. So if you saw a press conference, if you suddenly saw a press conference on the calendar, you knew damn well the probability of a rate decision or a rate change was much higher. But Powell's put a kibosh on that. Nobody's expecting a change anyway.
In the rates.
So no, because they're just about zero anyway.
And if the rates don't change, then you don't expect that's going to affect the market, or do you think it will?
Well, this is the whole thing. The rationale is that the expectation is that we're going to get absolutely no change. Therefore, how can you get any volatility? But you just never know. But it's why I'm expecting the volatility to happen around the 7:30, as people hang on Powell's words, and any promises he may or may not make, or any data that he divulges that is new to the market, could have an impact.
Okay.
So yeah, it's a damp squib. Here we are, 7 o'clock.
Here we are.
Beginning all we've done is pulled back and beginning to see a continuation of today's trend.
Okay, I'm just waiting. Oh, that's live coverage. Don't want that.
So what I mean, if I'm not expecting volatility, but what I would do with data is I would look for the initial move. I don't think I would look. I haven't traded data for a while now because of the situation. But normally, I would wait for the initial move. If it's up, I would wait for at least a 50% pullback, or a 70, sometimes a complete pullback before I entered it. So that will be direction, that will be the pullback, and that will be the move, three-way move. So let's see if that kicks in. If this is going to be the move, if we get a decent push up here, then Powell might drag it down again, but the market might drag it up into the close. Yeah, but my feeling at the moment is that the market's finally balanced and everything's priced in, so I'm really not expecting to see any fireworks or violence.
It should have come out now, though, shouldn't it? The announcement.
Oh, the announcement's out, yeah, and that's the reaction.
What is the announcement?
Okay, I'll go and tell you.
Looking online and I can't see it.
Right, I'll grab it.
Let's come to
Hang on. No change. So it's all down to the press conference in 28 minutes, 27, 28 minutes.
But it actually, the headline today everywhere is Wall Street jumps on coronavirus treatment hopes, biotech group Gilead.
Yeah, that story hit.
Main reason that everything's pushing up more than the Fed.
We saw a 200-300 pip drop last week on negative Gilead news, and now we've seen this on positive Gilead news. Let's move on, because I'm just not. I think it's going to be a damp squib. Let's carry on talking about chart patterns. So
you don't think the Fed's going to adjust? You don't think the Fed is?
I think
no change anyway.
No. I think we just might see a push into the close. The most likely scenario at the moment is a push into 925k sometime in maybe the second half of this week. Who knows? It's the trouble is at the moment the volatility's gone. Yeah, the VIX index is calm right down. This is the VIX index. So here's all the violent moves into. So we started to calm down on 19th of March. We saw big reversals in the market on the 23rd. Once this index calms down, it can make life quite difficult. It can make life harder for a day trader anyway. Because all the time we were along here in November into early January last year. If you look at November, January last year on the, I didn't mean to do that. Oh, there it is. Let's go back to November, January for the indices. So calm VIX saw really shallow moves here. It's not until the VIX started to shake up that we got some good volatility. So at the moment we are, again, if you look at the weeklies, we're really shallow. We spent 2.5 weeks doing not a lot really. A couple of pin bars on these weekly charts are broken up through weekly resistance here at 440. But at the moment we're in fairly calm waters. Trying to make a decision as to whether we're going to reach out to 25, 26k or hit resistance and roll over. So the VIX is giving you the big heads up that we are flat to bullish at the moment. So as my bear raider hat, I'm having to put my bear raider hat on the hat stall, on the hat stand, and let it sit over there in the corner while I try and focus on buying dips and getting any pushes into these resistance levels. But I'll put that cap back on if we can get some signals. And
what about, coming back to what I mentioned earlier, what about this idea that if a company's about to report that you buy the stock on the close, but with an almost immediate
you're talking day before announcement?
No, I'm talking about things like tomorrow, for example, Amazon, Apple, Shell, Lloyds, Gilead. Gilead are reporting tomorrow.
Right.
So, tomorrow's quite a big day for reporting. So Shell, well, is Shell on the US exchange or on the UK only?
Shell is on many exchanges, I think.
You can't, I think, I'm just wondering if we can buy, well, it's shut, well, it's European, Royal Dutch Shell. Not by Shell anyway. But for example, Apple, Amazon, I mean, if Amazon...
Here's Shell on the NYSE, on the US exchange. Why is that so
See,
gappy? Well, that must be a particular...
I mean, if we look at Amazon, for example, Amazon is about to report tomorrow.
right.
So if we were to buy Amazon, Amazon is currently at 2362.
Mm-hmm.
So if you were to buy Amazon, say it closes at 2370, if you were to buy at 2370 today, but put a stop on at 2340, so you've got a really, really tight stop, so that basically you can only, either your stop kicks in or it shoots up on a good report. Does that make sense?
It does, but
You're just trying to pick up any massive swing.
Yeah, but some earnings, every now and again, you get if it's unexpected, it can gap. So if it gaps in your favour, great.
But if it doesn't, then you...
If it gaps against you, you could be in trouble.
Oh, because your stop won't be able to...
It could fly through your stop.
Got it. Yeah, I've got it. Yeah, so you might. Yeah,
so
you might.
You got to be it's much safer just to back off, and certainly the big money would potentially take profits in the run up to earnings and then back off and see what the result was. So I mean, to me, I've got no setups to trade this Amazon. If I was looking at Amazon, it would just be on my watch list. I wouldn't trade it here at the moment.
Mm-hmm.
And it's had a good, some distance away from the averages here, so we're really extended up here, with resistances very close by. Yeah, it's a great stock. We all know it's a great product and people are using it a lot, etc. But it's had a very good journey.
Yeah.
And we've got all the support down here at 21.85. I would just, I'd just set an alarm and just leave it alone.
Just see if it can come. Okay.
You've got to be very careful with earnings. You can get some nasty gaps if the market is surprised at all.
Okay. And I suppose everybody expects Amazon to be exemplary, so you could easily have that. Yeah.
I tell you what, you can have a stock like Amazon that puts in good results and they'll still slam it.
Yeah. Whereas actually stocks that people think are basket cases are probably actually have been reporting, we think it's not actually quite as bad as you thought it was, and they've been seeing a growth. Yeah.
So it's better with earnings just to sit back and take a look.
Mm-hmm. So would you do any trading on the Dow or not now?